Most retail traders think the 5-minute opening range breakout is a simple game of lines. You draw the high, you draw the low, and you pray for a candle to close outside the box. But let's be honest. How many times have you bought that clean morning breakout, only to watch the price instantly reverse and hunt your stop loss? It feels like someone is watching your screen. The truth is, someone is watching. Market makers use the opening 5 minutes to trap eager retail traders who jump the gun without reading the data behind the move. Today, we are changing that. Welcome back to Wally Trades. In this ultra-deep masterclass expansion, I am pulling back the curtain on the pro filter, volume and relative strength. This is the exact toolkit that separates a retail trap from a true, high-probability institutional breakout trend. We are going over the shoulder. I will show you exactly how to read the tape, spot institutional footprints, and ignore the noise. If you are tired of getting faked out and ready to trade like an insider, smash the subscribe button and join the Wally Trades family right now. Let's dive straight into the charts. Welcome to the engine room of this strategy. If you take away only one lesson from this entire tutorial, let it be this: price is the steering wheel, but volume is the gas pedal. Most retail traders look at a breakout line and just hope it pushes through. Institutions don't hope, they push it through with millions of dollars. To track them, we need to configure our volume panel properly. Go into your indicator settings, click on your standard volume tool, and toggle on the volume moving average. Change the default length from 20 down to 10. Why 10? Because the morning open moves at lightning speed. A 20-period average lags too much. A 10-period moving average gives us a hyper-reactive baseline of what normal volume looks like in the first 15 minutes of the trading day. When your 5-minute breakout candle is forming, look straight down at the volume bar. If that bar does not punch cleanly above that neon yellow 10 MA line, the breakout is a ghost town. It is retail traders buying a mirage. Do not open a position unless that volume bar shatters the 10 MA line. Let's take it a step deeper and look at relative volume, or RVOL. RVOL compares the current volume against the stock's historical average for that exact time of day. To make this dead simple for you to execute without overcomplicating your screen, we use the rule of 2. When the candle that breaks your 5-minute high closes, its individual volume bar must be at least 2 times larger than the volume bar of the candle immediately preceding it. Look at this real market example on AMD. The candle before the breakout had a volume of 149,300 shares. The actual breakout candle slammed the tape with 369,500 shares. That is nearly 2.4 times the volume. That is the footprint of a large institution, like a pension fund or a major hedge fund, aggressively executing a buy program. When you see a multiplier like that, the probability of a fakeout drops significantly because there is a wall of money protecting your entry price. Now, let's talk about the absolute holy grail of day trading: true relative strength. A lot of retail traders hear that word and immediately go to their indicators panel, type in RSI, and load this up on their screens. I want you to take your mouse, find that little X, and delete the RSI completely off your charts right now. Boom. Gone. The RSI is a lagging mathematical oscillator that tells you absolutely nothing about the live institutional order flow happening at 9:35 a.m. Throw it in the trash. True relative strength means finding a stock that is completely disconnected from, and outperforming, the broader market index. When you are preparing to trade an opening range breakout, look at your split screen. If you are trying to buy a bullish breakout on Apple, you must look at what the SPY or the QQQ is doing at that exact same minute. If the SPY is actively crashing, making new lows on the morning, but Apple refuses to break its 5-minute low and is instead grinding toward its 5-minute high, that is a massive anomaly. Think about it, the entire market is pulling Apple downward like an anchor, yet it's still staying afloat. Why? Because institutional buy orders are hitting the tape faster than the market can drag it down. The moment the broader market stop orders exhaust themselves and the SPY experiences even a tiny, minor bounce, Apple is going to launch like a rocket out of a cannon. Let's formalize this into a professional business process so you never have to guess again. Before you click the mouse button to take any opening range trade, your brain must clear this exact checklist. Did the 5-minute candle close cleanly outside the boundary? Is the volume above the 10-period moving average? Is the breakout volume at least double the previous candle's volume? Is the stock showing relative strength against the S&P 500 or Nasdaq? If even one of these conditions is a no, you walk away. There are thousands of stocks in the market. You do not need to force a trade that lacks institutional backing. By filtering your setups through this strict matrix, you stop being a retail speculator who gambles on directional movement, and you transform into a systematic risk manager who only deploys capital when the mathematical edge is entirely on your side. Now, knowing these filters on paper is one thing, but seeing them play out live, candle by candle, when real money is on the line is where the real education happens. You need to see exactly how to execute this when the charts are moving at hyperspeed. If you want to see these exact concepts applied to a live, taking market in real time, subscribe now. I am unlocking my full live market walkthrough exclusively at 1,000 subscribers. I'm going to show you a raw, unedited case study on Nvidia where these filters kept me out of a brutal $400 retail trap in the first 8 minutes, and instead perfectly guided me into a clean $850 winner just 10 minutes later. I will walk you through the exact order entry buttons to press, how to handle the psychological panic when the price retests your entry, and the exact moment to lock in your profits. If you want to make sure you do not miss that live masterclass execution, hit that subscribe button right now, turn on the notification bell, and drop a comment below letting me know. Are you currently using volume to filter your trades? Subscribe now, study these filters tonight, and I will see you in the next video.